What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Happy Friday to you and happy NFP day. It has been a really weird week for me. We have just so much stuff going on here. And I know you guys, everybody's got their problems, but our email system is messed up. I've been working on that like for hours and hours and hours. And believe it or not, I spent like 3 hours yesterday working on setting up a Minecraft server that is, by the way, up and running. If you want to join that, if you're like a member, I think I'm going to just, for initial, since it's not like a huge server, if you want to play Minecraft with the gang, I think for starters, we're just going to do people who are in our Discord. So send me a direct message on Discord if you want the server info and you can come join us. But yeah, that is set up. But oh my gosh, setting up a Minecraft server is way more stressful than I thought. And I have somebody who knows what they're doing helping me out. Like they are like installing plugins and configurations and all this stuff. Anyways, so the markets are closed formally, but there are still ways that we can look at price action here to derive the market's reaction to NFP this morning. Really a crazy week in many fashions. You had some really wild moves in the financial markets. To be fair, this is actually the first week in a while, guys, where the stock market has had a positive gain, right? If we go to the weekly chart for just a second, you actually had a green week, breaking the 5 weeks in a row losing streak. I'll be joining that server. Join up. I don't know. We can build a town or something. I need some experienced Minecraft people on there. Anyways, breaking the losing streak. Take a look at your long-term moving average, the weekly moving average. We did regain the 50-week, which is a positive sign. And I think actually, I know that, the markets are closed, but I think that the data itself from NFP this morning is going to be more important to me than actually what the market does. Because let's compare notes to last time we had an NFP report, because our comps this month are terrible. I guess compared to last year, that's not what I'm talking about, but like month over month, last month, our comparable feeling pretty awful. We missed by 150,000 jobs in regards to expectations last month. So let's talk about it. So last month, in a month ago, when we had an NFP, we forecasted 58,000 jobs to be added to the U.S. economy. Instead, we got minus 92,000. We lost 92,000. Can I also remind you guys that this number last time was reported for data representing pre-war stuff? The reason this NFP report is very important today is that today we are getting March data, right? Remember that on the first Friday of each month, you get the previous month's reported data. So this one that was reported in March represents February. The one in February represents January, so on and so forth. The war really started taking place in March. So today, on the April released NFP report, we will be getting March data. One more thing on data, and kind of this weird week where we have the short trading week. The commitment of traders data will also be delayed, I believe, today. Due to Good Friday and Easter, there is a delay. It's a federal holiday. There's a delay on the commitment of traders data reported today. So with that said, the reason today's NFP report matters so much is that when we look at this stuff and we say, okay, the jobs report is going to represent a period of time in which we have seen the onset of this war. Why does that matter? Well, the war immediately causes many industries to see price jumps, inflation expectations rise, etc., and can cause, this is the question, employers to pause hiring or to even let people go, etc., etc. It may not feel, it is very relevant. Like if a war breaks out and it does cause supply issues and price hikes due to inflation, if that is taking place, which that's why this number matters, it can have a meaningful impact to the economy the longer it goes on, right? So if you get a bad jobs print today and then another bad jobs print the next month and it keeps going on, that can cause serious damage to the economy. That being said, we could also see a surprise upbeat. So let's take a look at in terms of what we're expecting here. And I know the markets are closed today. It's a weird NFP because you're like, wait a second, gold's not moving. I know there's 410 people watching across all the platforms. About 409 of you are staring at gold's price right now and saying, why isn't gold moving? I'm kidding. But there are a lot of gold traders out there, so I might not be exaggerating. What about gold? Yeah. So again, gold is closed due to the futures exchange being closed. So we are waiting. We won't get price action moves on gold today. But if you are truly a macro trader, you will still care about what this data actually tells you because it's going to cause big moves on the Sunday open. So we have 5.5 minutes to go or so. Take a look here at the expectations. So we are expecting 65,000 jobs. Reminder that the previous one was an abysmal jobs report. We're expecting 65,000 jobs added to the economy. We're expecting unemployment to remain unchanged at 4.4%. So we get that data in 5.5 minutes. And we'll see what that does. I have an open position. When the market opens, it won't be good for me. Which position are you in? What we can do though is we can be smart, and hopefully I can put my thinking cap on today. I don't know. I'm pretty worn out today, but we can try to derive market reactions without seeing price. Some advanced tactics here. Let's work with what we do have. We have the currency exchange market open. Watch the yen, watch the dollar. We have crypto 24/7. We can get an idea of how risk sentiment is there. So even though, I mean, this is by the way, this is market junkie talking right now. We're talking about the markets are closed. We should probably just go do something else with our time today, but instead we're going to stare at all the alternative charts to try and derive what the market's doing. That is junkie behavior. Let's call it what it is. You, me, everyone here, junkie behavior. In all seriousness, trading is different than casino gambling, but it can very easily be converted into something really, really close. But what we can do, we've got Bitcoin, we've got dollar. Let's look at, I'd like to see Euro US dollar here, which is open, by the way. And we can also take a look at like dollar yen, and we can build a bias on what's going on here. So let's also do, I don't know, maybe let's add more charts. Why not? We'll build a little assortment here. What do I want? I want this. So we have Bitcoin open. We have Euro dollar. We have, I think SPX, this is again true junkie behavior. I believe SPX will be open until 9 a.m. Like this is still moving, right? Is it? Yeah, still moving. So we have SPX. Very nice. Okay, yeah, SPX closes early, but that is oil is closed. Unfortunately, we can pull up dollar yen here, and I want to see Aussie dollar. I want to see pound dollar. All right, so we got a little bit of a assortment here. Let's change everything to our 15-minute candles. And this will give us, now remember guys, we don't have gold, but you know what? I actually want to switch this out for dollar CAD. We don't have gold, but we have commodity currencies. Okay, so we have, for example, the Australian dollar and the Canadian dollar. These two are currencies that, of course, are very commodity-heavy economies. So yes, we can still derive some kind of market reaction. So we again have Bitcoin in top left, Euro dollar, SPX, dollar CAD, Aussie dollar, dollar yen. And with this, I think, do we have yields? No, I don't think so. We might have, no, we don't. Yes, we do. What? Okay, we have bond futures. Yeah, we'll leave it at that. Okay, anyways, with that said, today we have a couple things going on. We have the NFP report. CFTC's Commitment of Traders report will be delayed by a trading day. So I think that will come out Monday night. I believe that's correct. We've got 1 minute to go before the non-farm employment change. Just a reminder, guys, so what we're looking at is the reported numbers for March, which do encapsulate the month in which the war started. So this is pretty big data. You've got 1 minute to go. We're expecting 65,000 jobs to have been added to the U.S. economy in the month of March. If we exceed that, that is more strong for the dollar. That is, we'll come back to stocks. That's weak for gold. Vice versa. If you get a big fall off in jobs, which we did see last time, if we see a fall off in jobs versus expectations, which is the key thing here, that dynamic could be more dollar bearish, etc. We've got about 30 seconds to go. What I've done here, guys, is I've put together a assortment of charts for us to watch. We've got bond futures, which I don't know if those closed or not, but we're about to find out, I guess. Meanwhile, we also have dollar yen, Aussie dollar, dollar CAD, charts that are moving this morning as we have a lot of stuff closed for the holiday. So let's keep an eye and see what we do, what we can make out of this this move. NFP should be dropping any second now. and we'll see what it brings us. Okay, so initial reaction here. Euro dollar down, dollar strength coming in. Aussie dollar down, dollar yen up. Bonds are actually asleep. Dollar yen moving higher. So this is definitely a strong jobs report relative to expectations. At least that would be my initial guess here. S&P 500 is mixed. Of course, that kind of makes sense. We want rate cuts, so strong jobs, somewhat problematic. Oh my goodness. Oh my goodness. That is a huge beat. Double beat, my friends. Wow. Look at that. Unemployment rate dropped. Jobs added were a 3x. Oh, but hold on. Look at that. They revised. Pause. They revised last month's number lower. I've never heard that one before, except every month. But yeah, okay, so look at that. So minus 92K for last month's revised down to minus 133. So that's bad. But what's good is, my goodness, the front month here, March, they actually added, the economy added strong jobs, like real strong. 178,000 jobs added. That's upbeat. That is actual hiring going on. 4.3% unemployment rate. That is not recessionary. I'll tell you that much, at least for now. So as far as I'm concerned, that's minus the revisions. I mean, so let me give a grade to this. We had our average hourly earnings slightly lower. We had non-farm employment change better by a margin. Unemployment rate better. I would give this a B plus. Okay, B plus. Why is it not an A? Revisions, rough. Average hourly earnings, soft. Consumer already under pressure due to rising gas prices. I'd give it a B plus. I don't know. Let's bring in Chris Pulver and see what he has to say in regards to today's NFP report. Again, euro dollar is moving lower. You have Aussie dollar down, so dollar strength coming in. S&P 500 gained and gave it back, all in the last 30 seconds. Hey, Chris, how's it going, man?
What's up, man? Happy Friday.
Happy Friday. Weird week in terms of the shortened trading week with an NFP falling on Friday.
Yeah.
A lot of people have been like, hey, why is gold not moving? I've probably answered that 47,000 times, but that's okay. Chris, B plus, fair?
Yeah, it was funny. As soon as I saw your reaction, I was like, just wait for revisions.
Yeah,
and
right.
That's pretty much, honestly, like even going into next month, I'm like, let's see what that 178 gets revised down to, most likely,
Almost every time. It's like,
yeah, it's
not coincidental anymore.
I think we talked about this not that long ago, but I'm seeing more people lean on ADP numbers on Wednesday versus non-farm payroll that comes out monthly. So that may be a better reflection of what's actually happened in the near term, like week to week, to show like, are we actually showing job numbers, because it's really like 20,000 jobs. ADP is like 20,000 jobs. Like this number at 178, I have no idea how that number came to be. It's like, unless it's government jobs, which it could be, I guess. I have no idea. I know Trump State of the Union, he said that all this was private sector, but I don't think that it is. I don't know. It's so weird that we're skeptical of all this stuff, but it's like, we after having the longest government shutdown in history last fall, the data was already compromised. Now it's being just, I don't know. It's like a weird, like weaponizing our economic data now that comes out. So revisions, that's ultimately what matters, because for the last year, we really haven't had much job growth. The revisions that they had during the Biden administration was nearly 1 million jobs that were revised lower. And here we are just, seeing a one-off beat, but the revision got 40,000 jobs worse. Unemployment rate, I just think you have people not participating the same. That's why the rate stays low. It's a gig economy at the same time.
Check this out, Chris. I'm just getting this from the BLS here now.
Okay.
On my screen, just a little bit of a excerpt here. So non-farm employment change, 178,000 in March, and unemployment rate changed little at 4.3%. Bureau of Labor Statistics reported today job gains occurred in healthcare, in construction, in transportation, and warehousing. Federal government employment continued to decline. So kind of interesting there to see where that's at. Both the unemployment at 4.3% and unemployed people at 7.2 million changed little in March. These measures also changed little over the year. So, I mean, interesting. I think that coming off of last month's jobs report, which was absolutely terrible, you know, this maybe there was a little bit of bouncing. Maybe people paused on hiring for some reason and pushed it to the next month. But again, the concerning thing is genuinely like revisions every single month down. Make it hard to trust the front month every month.
Do we count AI agents now for hiring? Is that going to be included? Then we'll start having we'll have millions of employees.
Yeah, right. That's right. Following through here, at least initially, we did get the upside push on SPX, now falling down. And I believe, just for context, for those of you guys who are watching, I know we're limited on which charts we can look at today due to the futures market being shut for a bunch of stuff. I believe this closes at 9 a.m. So we have a little bit left here in terms of time to watch the market's reaction to this jobs report. I'll just also share in terms of calculus for how EdgeFinder is going to think about this. This is going to increase dollar strength in the meantime. Unemployment rate at 4.3, 178,000. I mean, that's going to, in terms of our system, going to factor in a little bit more strength for the dollar. And I generally still agree with that. I am short the euro dollar. I do think that dollar index is likely to make a break for 100.5. I've been talking about this. I think, you know, we keep knocking on the door here, Chris. I think we could see that dollar expand a little bit more, and that would probably cause a little bit of a slide in equities. But I mean, weird reaction today, Chris, or yesterday. Oil price jumps by what, 12, 13% yesterday.
Yep.
And equities are flat on the day. Crazy.
Well, but they had to come back. I mean, intraday, there was a huge spike. There was like a 70-point spike in 15 minutes yesterday. So what was interesting as far as like reading that tape is, you know, clearly things have escalated where Trump's comments from Wednesday night didn't necessarily, you know, look good as far as like, oh, there's a de-escalation. There's an off-ramp to this U.S.-Iran conflict. But to see oil up and equities, if you look at the intraday price on S&P, I mean, this is the chart that I'm talking about yesterday. Intraday, you know, we had that huge gap lower. We were down over 1.4% yesterday, and it ripped all the way back up. So, I mean, we finished flat on the day, but that was because of a nice little comeback trade. So oil up on the day, and then stocks, I'll just put SPX up on the day. I do wonder if, you know, that's the market's ability to go up on bad news. That might not be a terrible sign. And especially with non-farm payroll, maybe giving a little bit of a mental boost. Maybe that kind of helps the market going into April. Now, I say that, but remember what we talked about, these like 4-hour charts. The structure is still extremely clean. You know, the daily chart here, right back to the 200-day moving average. I would be shocked to see the market come all the way back above 6,800 with much conviction. I think if anything, we might poke above the 200-day. But just be aware of that potential rollover on the 4-hour chart. You know, you had that great chart you showed for a while now with those moving averages.
I've got it ready for you.
Yep. So same thing on the 4-hour chart. If we hit about 66.25, 66.50, and that turns over, well, there's the trend line that we've been watching, you know, get rejected for the last several months now. Once we started to flatten out and then started to roll over, you know, that trend is still pretty solid. So anything below, looks like around like 66.50 or so, or a fake out, you know, 66.50, 6,700, a fake out that rejects. It's like the bears are still in kind of control technically. Show me that chart.
And here's here. I've got it ready for you, Chris. Don't even fret. Here it is, still intact.
Exactly.
I mean, I think that we've been so accustomed to, Chris, to these V-shaped moves in the S&P 500, and I'm not saying it can't happen again. Because, you know, it certainly could. But I just kind of go back to thinking logically, we keep seeing this two-sided story as opposed to, you know, in previous V-shaped types of moves, they were very like binary, could be taken off type of moments. Not so much with the Iranian situation. There's many parties at play here. And as long as energy infrastructure remains in question, which, you know, Trump again made comments, I believe it was yesterday or this morning, talking about still targeting the energy facilities, power plants, etc. And that seems to be a touchy point for the market, because it, again, if we're going after targets like that, that causes disruption to energy and uncertainty in the region for that oil trade. Which, again, oil was up 13%. This is market is closed for now, but I did actually get a long position going. I'm feeling really vindicated with that move. I didn't call that. I thought Trump was going to come out and be kind of way more hawkish on the war, but that certainly shows where the market was positioned for. The market was positioned for Trump to come out and say, we're out of here in 2 weeks, no more, we're going to pull the military, we're not going to put taxpayer on. That's kind of what people thought he was going to say. And he did not say that. He said, we're going to finish the job. Basically, they're defeated. Like, we're going to, put an end to this. And so, oil shot higher. And I think that until that story goes away, and what I've said is unilateral, both sides acknowledging, some kind of ceasefire into it, de-escalation, et cetera. Until you get that, it's just hard to see equities rallying to all-time highs and energy or oil falling dramatically.
I think oil might surprise us to how technical it could be. On my chart here, this is that little Gartley pattern. So XABCD, I've got this projected to be about a 116, 117 top on oil. Again, that's what I'm looking for, is similar to what gold did. You can see the same type of pattern in gold. Take your XABCD. So here's your X, there's your low, high, higher low. When this was happening, I drew this green line on my chart. We hit it, and that's where our top was. So, defined risk wise, I wouldn't mind I wouldn't mind taking a short on oil at the 115-ish area, 115 to 120. That'd be my stop. That'd be defined risk with options most likely. But I wouldn't be surprised to see that technically play out. Silver did the same thing. Gold did the same thing. Would oil do it with what's amazing, with even with crazy high volatility, the markets all of a sudden still snap back to something that technically makes sense. So I don't know. I'm not in the camp that oil is going to, $200 a barrel. I think there is an off ramp to this. Certainly if it's from an off ramp of Trump's mouth, I think that's probably the first off ramp. But really, if we just de-escalate, I think what we're trying to do is we're almost like goading the world to like take the Strait of Hormuz for themselves, and we can just stand back and be like, well, we're energy independent. We started this thing, but I don't know. I think from Trump's sentiment side, he's like, it seems like he's just snow globing this thing again. It's a lot like 2025. It's like, it's really uncertain, but I still think there's a pullout from Trump that's like, I don't know. He's the first line of defense, and almost a 10% correction. Who's been the most vocal to try to get this market to pivot? Trump.
Sure.
So I think there's a lot of noise. There's a lot of comments. His stuff. I think it was. Oh fudge! Where was it? Was it this? This was Wednesday night to Thursday morning, right? There is a new regime president, much less radicalized, just asked for a ceasefire. Market loved that, and then right after that, it's like we're gonna bomb them to the Stone Ages. It's like, how do you say that thing in the same breath?
I know. Yeah,
we have this make any sense. So
wild two-sided thing there, and it is that's why the markets are so volatile right now. That's why you still have VIX mid-20s, not cooling off that much. Also, we had a donation. Thank you very much for donating to the coffee fund. Can you guys add a theme like dark to light? I think you're probably referring to EdgeFinder. Unfortunately, the software that we've built it in doesn't have that sort of like everything is set to a certain color, and not really an easy thing to add. I hope that they implemented some way within the software, thing that we've built it in for that to be made more easily, but maybe in the future. I hope so. I would like that too. I think it'd be cool to have a couple different themes, but for now, dark theme, we a long time ago, we did like a vote, like which is better, and dark theme won by a good margin. So at least for now, that's going to stick, but hopefully in the future.
I want to address a comment here in the chat. You don't see $200 oil. I mean, not with any sustainability. I think if we have $150 to $200 oil, that's the top, and oil probably starts its decline down to $50 or lower. I think that's the crazy game that the markets could play, is we could see oil go to unbelievable prices. But once we are done, we are going to get oil crushed. I mean, sure, it's a supply and demand game, but higher prices like that will force innovation and ruin demand, that you'll see oil probably back down sub 50. Give it time.
Sure.
But my point was, I'm not trading the $200 oil. I'm not speculating. I think that's way too much of a reach. I don't see a good trade there. I feel like if we do it, I'm going to short it. I'm going to short 115, 120 oil if I can get a defined risk trade for a 30 to 60 day window.
Yeah.
I don't mind shorting a 150 oil. I don't mind shorting either one of them, but there's no way I'm going to be long. If I was long, it would have been where you were long, Nick, at 55, $60. Get
Sure.
long, and you've got a great trade for 2026. I'm not getting long at 112 and think we're going to 200.
Yeah. Well, and also to follow up on that too, Chris is not saying that $200 oil is impossible. He's just saying unlikely, right? There's a difference.
Yeah.
And
the amount of pain that comes with that, I feel like, I mean, as crazy as Trump might be, I don't think he's an idiot with his panel and people around him, that it's like, if we hit $200 and that's the type of shock we have, I don't know what that does globally. I mean, this whole thing with the Strait of Hormuz, I do think is more about weakening China and getting a direct, like having a direct impact to China and Asia's oil flows than it does the US. But man, it is disruptive globally. It's certainly friction. And I don't know what would be the global benefit of seeing oil go to $150 to $200 without just kind of realigning the global superpower control. So
yeah,
anyway,
Chris, I think this guy might, to be completely honest, I think he might be rage baiting us a little bit. He's got a lot of question marks in his comment. Listen,
yeah,
the point is nobody
I addressed
knows
one of them. That's about
yeah.
it.
I think that woke him up. He's like, I'm ready. Let's get fighting. He says,
Yeah.
I'm done with this channel, bro. Good luck to you, honestly.
Cool.
Yeah, trading is not that easy. If it was obvious that oil was going to be at 200, guess where we'd be right now? We'd be at 200. So there's nothing obvious about where markets are going to go next. And to Chris, to your point, in all seriousness, ignoring this person, he's clearly got a chip on his shoulder today. The reality is that, to your point, yes, if you see oil price jump to 120, 125, 130, 140, I think, personally, I think Scott Bessent is a pretty smart dude. He knows the markets really well, hedge fund manager in the past. You're right. I think he's going to tap the shoulder. He's going to say, yeah, we're going to have problems here. And Trump knows the stock market, the oil market. To your point, does he have big ideas? Is he very aggressive? Is his agenda, in many ways, for many people, considered outlandish or radical, et cetera? Maybe so. But he's not dumb. And he's also aware that there are levers that can be pulled, things that can be said, adjustments that can be made to stop an oil blowout to 200. Nobody wants oil at 200.
Right.
So a lot of people, a lot of levers are going to get pulled if this oil thing keeps going. So to that point, you might say, well, then, Nick, why are you long oil right now? Well, part of it is actually not geopolitical. It is more that recently we had a nice collection of economic data out of the US, like retail sales that came in stronger. Like this week has actually been a really good economic data week for oil. By the way, S&P 500 getting a bullish reading. That is crazy. Oil, when we look at jobs report, came in way better than expected today. Updated score for oil, unemployment rate 4.3%. Jobless claims this week were better than expected. ADP better than expected. We had retail sales beat expectations. Consumer confidence beat expectations. Manufacturing PMIs. I see that the economy is not falling apart, and I say, okay, so the demand for oil is still there. And there's also, the last few days, there was something that kind of interesting took place on the options world. There was like a insane jump in the amount of puts traded. So you can see right here, put call ratio went crazy. So I said, all right, risk defined, small stop on this going into the Trump meeting. Maybe there's a surprise. And just lo and behold, there was. And so it was a defined risk trade. It was after a pullback. Oil was down, not a ton, 7.5% from the highs. Took the trade, and we'll see where it goes. This may be the hedge to my portfolio of stocks, et cetera, that are going to get crushed if oil prices keep going higher, right? So it's a trade. It's active. But to your point, I also don't see oil easily surpassing 120 and staying there. I think most likely I'll get trailed out before then, and that would be perfectly fine. It is kind of a hedge in the overall scheme of my portfolio.
Yeah. Well, since we talked last, I also I did some pretty good cash raising. I think we talked about it last week. That was going to be my goal, is to de-risk. And the fact the market gave us that nice little surge, we had almost a 5% rally from the lows. I mean, there's 4.65% off the lows, and a lot of that was all on March 31st. That was a crazy day. I mean, March 31st wasn't even like a gap day. It just surged. Like we had a gap up, and we had more to it. That little, like, noon. It was just after noon Eastern time. I mean, there was an interesting overlay with some of the zero DT stuff, and there was a large put level at 64.75 that was basically a put wall that was above a call gamma. In the options world, that's a big deal. That's rare to have that. But at the beginning of the quarter, JP Morgan's investment arm had it's usually like a 10 to 15 delta. They call it the JP Morgan college rate.
Yep.
And so their put level was at 64.75, and that continued to grow and gain all this traction. And so that became like a pin price, where if the markets were to stay below that as of the end of the quarter, that would have put a lot of market makers on the hook for having to hedge flows for the entire end of the month. But the fact we got up above that for the quarter and we finished the day around 65.20, it was just kind of another like brilliant story where market makers do the job, even though it was literally the last minute, like the last day. This is what they do best. So even now, we have a new quarterly hedge is going to be somewhere in the 10 to 15 delta range. I'll look up and see what that number is, but the SPX, let's see, I can roughly look at it right now from the close yesterday. SPX will go out to June. I guess it'll be July 1 now. So go trade, go out to July 1. I'll give a ballpark. So July, I'm seeing July 17th. So let's actually go end of the quarter. Sorry. So end of the quarter on the call side, we're probably looking. It's going to be way up there. What's crazy is because volatility's been in the mid 20s with the VIX. I mean, you're probably looking at like anywhere between like a 70.50 and 7100 call side. And on the put side, I'm going to write that down actually. So I'll try to verify it with some gamma readings. So 70.50 to 7100 on the call side. And then the put side, you're probably looking, I'd say 6,000 or lower, 6,000. Maybe even to the 15 delta, which is going to be a little bit lower towards like 50. Gosh, the amount of distance you can travel in a put on the put side right now is pretty impressive. Maybe 5,800. So 6,000 to 5,800. I'm just giving that a bigger range with the volatility. So again, if I'm trying to call the top, 7,100 would be this JP Morgan collar roughly. If I'm calling the bottom, 5,800. We look at the charts technically. 6,000 is a really, really strong level that I think should not be breached. I mean, it could be poked, but not necessarily closed below. But Nick, I think at this point this year, breaking the structure, markets making lower highs, lower lows. You got that nice clean 4-hour chart. I mean, even if the market returns to 6,800, I think that this market still rolls over. I'm trying to avoid the pain of having one more leg lower. Does that make sense? Because that one leg lower to 6,150 or 6,000. I mean, it's going to be unpleasant if that happens, because that next leg is what nobody's really positioned for. Also, I'm curious what the hedge positions look for as far as buying more puts. We've been in negative gamma for a lot this quarter, and I don't know if that kind of dominates the market with an elevated VIX, high put premiums. Every day is a wild ride, man. I mean, this week, I had a winning day Monday. Lost on Tuesday, won Wednesday, won Thursday, and made money for the week. Last week I was 5 for 5. It's always a grind, and I'm playing like really conservative stuff, but I'm doing it on zero DT options. So
sure,
it's fun. It's just crazy.
The efficiencies.
Yeah, I mean, it is the efficiencies.
Post on Twitter yesterday. Yeah,
exactly.
Yeah, so, Chris, I've got a little bit of. I was just reviewing now that NFP data, jobs report data has factored into EdgeFinder. I want to just real quick share what I'm finding here. So there is definitely a shift in scoring here within EdgeFinder today. Now, I reiterate this all the time. I don't take trades just because EdgeFinder is bullish or bearish. It's a confluence tool for me. But if I look at this and I say, all right, the jobs market data this week was far more resilient than I think the market's expectations for it was. Given this was the first kind of look into March data for the war, I think a lot of people, myself included, I expected some weakness. Now, how much can we trust it? That's the challenging part. But still, 178K. There's enough of a beat there that I think that's fair to say we had a decently strong report there. Meanwhile, all those data points that I previously discussed this week, we had PMIs that were good, retail sales, consumer confidence. I think that there is a opportunity for a stab defined risk long side, if and only if, again, going back to what we've discussed, this 4-hour chart starts to break ranks for the bulls. Now, I'm not saying I think that's going to happen, because technically and geopolitically, I think this market is a sell market in the sense that I'm not saying I'm selling the market. I'm saying that I think the market is taking every opportunity to kind of de-risk their portfolios, to take risk off the table, just because of the simple question mark of what's going to happen in the Middle East. Nobody knows. Okay, default is for hedge funds to take risk off the table. They simply just, they have risk parameters. When the VIX spikes, when you're under the 200-day moving average, a lot of the systematic, hedge funds, et cetera, just have rules in place where they need to de-risk their portfolio. So I think that that's kind of still a weight on this market. But let's paint a picture, at least in my own trading. If I see this type of move and we break above that 200-day moving average, to your point, could that be a false breakout and then we see the real second leg lower?
Right.
Definitely could happen. For me, how I'd probably play that is, I think there's enough of a room. If you get technical price action, like real good breakout there, pull back into this, I'd probably put this on. And hey, if it loses, out of the way, let it do its thing. Or maybe we do have kind of climbed the wall of worry. But to me, that would be where a risk-defined long setup on SPX, maybe next week, depending on what happens, I could see it. However, again, I'm not predicting that I think we're going to break this channel because, again, nobody knows what the headlines for this weekend are going to be. We could wake up on Sunday night with, U.S. ground invasion, right? Negotiations have fallen apart. So there's really this long weekend puts a lot of question marks on what's going to happen for Monday's open.
Poly market, I want to say, I'm just going to type in boots on ground. I'm going to see if there's
it's like a ground invasion one.
Okay. Yeah. I was wondering, because I want to say it went up. It's over 50% as far as what the poly market and I'm still trying to make sense of, like, should I look at this? And
Chris, go tap the word Iran there. Like, it's one of the categories up top.
Oh, okay. Here we go. Yeah.
Click that. There it is. US forces.
Okay. Yeah. Okay. So by April 30th, 82%. Oh, wow.
Oh, it rose big time.
That's crazy. So ceasefire by regime fall.
It was like 55 yesterday.
Okay.
For April 30th. Interesting. If
US
you
forces
click the
by
April 30th one, and then there's like a graph button. Yeah. See right there, order book, and then graph. It's like the tab graph. Yeah. There it is.
Wow. So that is a big jump. Okay. So this is where I saw the jump over almost 60%. And now we're up to 70, 80%. So like what I was going to say is I'm trying to make sense of, like, do I really rely on this information as a play? Are there, insiders that are now using prediction markets to make money? I wouldn't doubt it. I mean, if you're going to get mad in 2026 about somebody knows something and, this prediction market stuff is rigged, it's like, yeah, it's probably always been like that. But somebody knows something that you don't, and it's always going to be that way. And
yes,
whether you want to say that it's Trump or it's his son Barron or it's his insiders, it's like, it's probably tons of people. But if it's not you, then stop complaining. There's other ways to trade it and just deal with it. It's just the current market that you have.
And honestly, for that sort of thing, right, where it's these like geopolitical things, somebody might know something. The best guide you have is price, right? Because you can't,
for sure,
you're not going to lead anything more leading than price in regards to insider information. None of us have that, so we can't trade on that. And if somebody does, they're probably already pricing it into the market. So, and I want to reiterate, I like the macro data that we got quite a bit this week for stocks, but I'm still that geopolitical headline risk and the price action of the market, going back to our conversation about price, does not confirm that just yet. So I'm looking for signs of a bottom. But what we could have is the macro looks okay, but we have, to your point, maybe we just roll over again, and then maybe we bottom over here and I play it over there. I'm kind of agnostic to where I play the bottom. I like the macro, waiting for that bottom to show up though.
Yeah. If anything, this is crazy. I barely saw the market go up, but this like 4.65% rally was enough for me to raise almost $400,000 in cash in my portfolio.
Wow.
That's not bad. Like I went from, about 40% cash to now closer to 50% cash, which to me is a big deal. So any premium I am willing to take on is going to be back down here towards these April 2025 lows.
Wait, Chris. Break that down because I'm a little confused. So I imagine other people might be as well.
Okay.
When you say you raised cash, I know you were selling a lot of cash secured puts. Did you take some profits? Did you roll those out? Is that what you're saying?
I took profit. No, I took profit. So I had profits running. So tickers like I put this in the poll roller too as a summary because I had some ratio spreads and naked puts. So I was long on shares of CVX. Closed them, near the top here above it was like 210, 211 that I closed out CVX. XOM for Chevron Mobile, Exxon Mobil, same thing here around the 170 zone. So right before the top the last couple of days. XLE closing out above $62. XOP closed out here around 187. XLU closed out here around the $46.50 to $47 zone. It's like I had those trades, by the way, were probably all like 85 to 90+% of my max credit because they started last fall. And so a lot of these trades were in here way out of the way, and they went out to June expirations. They went out to September, October, December expirations of this year. I got all that time back, which is nice. And because we were so far up in those tickers, they were out of the money far enough that my probability of profit remained very, very high. And I'm not going to sit and hold those things for, if I'm up 90% max credit and I've got to hold it for another 10 months, it's like, that's not worth it to me. I'll just take the 90% profit and move on. And that's what allowed me I say raise cash, but it's like I de-risked by about 400K. And now that's more capital for me to work with and figure out how I want to deploy.
Right. And if you close, short options, you're not necessarily in those positions in terms of like allocation wise, but you are on the hook still with that amount of capital. So freeing that up is essentially the same thing. I actually have, and then we got to go. I have a prompt for AI that I use, which is I screenshot my options positions and say, if all of these got assigned, how much cash am I on the hook? Because at least in my brokerage, there's not like a, if all assigned, here's your cash needed. So I just have a screenshot that I do, and then a predefined prompt for AI that helps me to map that out. It's super convenient.
That's very smart. Are you using Gemini for that?
I use Gemini and Grok, and those are the two ones that I use, and Perplexity, I guess. But anyways, Chris, we gotta run. I'll send you that prompt if you want. It's super
send it to me.
to have. Yeah.
That's
okay. Good. Chris, have a good weekend, man. Thanks for coming on this week. It was great conversations.
We're probably having a baby over the weekend, by the way. So new Monday.
Congrats, man. Congrats.
All right. We'll talk soon.
Stuff. See you, Chris.
Bye.
Okay, guys. Also, real quick before we throw over the show to my friend Tiger Barry here. He's taken over the stream. Just a reminder, hey, our sale event for the EdgeFinder is going on right now. EdgeFinder is currently, by the way, like we just had a bunch of score changes. Gold is flickering bearish. We have dollar still getting strong readings. Oil, US dollars at 10. We had a major swing in scores today due to this NFP report. We went from last month's terrible jobs report to this month's really solid jobs report. And this is massively factoring in to scores across EdgeFinder. While the markets are closed today, there's some stuff that I will likely be doing on the currency side because that is still open. And some game planning that I will be doing for Monday's open. With that said, if you do not have a copy of the EdgeFinder, now is the best chance all year long to pick up a copy while the 40% off discount is going on right now. If you have questions, if you need to set up a payment plan, if you need to speak to someone on our team about what the tool is, how it functions, etc., you can click this link that's just been dropped in the live stream, in the live stream chat there, or scan the QR code that is right below my camera there to explore the tool for yourself and to see all the different features that it offers. The reason we're doing the sale, we just kicked off our 4-year anniversary sale on the product. We launched this thing to the public 4 years ago. It has been a wild ride, and this thing just keeps getting better and better thanks to the awesome team that we have here at A1 Trading behind the product. We're not going anywhere. We're going to keep making this thing what I believe to be the best tool for the retail trader that wants to use institutional grade stuff. That's our goal. That is where we're headed with it, and continuously striving to make it the best product for the average trader, not necessarily some Wall Street proprietary trading tool person. We're trying to make this stuff for everyone. So with that said, if you want access to our scorecards, track institutional activity, track crowd sentiment, our top setups algorithm, our macro screeners, economic heat maps, right? If you want to track, the state of the US economy in more detail, all of this stuff in one platform. It is browser based. There's no installation process. It takes like 5 minutes to get set up with a copy of EdgeFinder. And right now you can do so at 40% off if you send us a direct message using the link in the chat. Okay, guys, up next, you have Tiger Berry just after this quick break.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Good Friday today, April 3rd. Hope you're all doing well out there and staying safe on this thin liquidity day. Keep in mind that these spreads can widen at times, and those hidden charges that we see come up at the beginning of the intraday session, towards the lunchtime doldrums, the end of session, obviously before, during, and after high impact red folder events, we could be seeing that all day. So just be careful. Might be one of those pricey days to be trading, depending on your brokers, obviously. So yeah, just wanted to throw that out on the outset there. It's all about currencies and crypto today as far as what we can trade, unless we want to go trade seashells or, I don't know, Daniel Boone hats or something. But yeah, definitely a little bit on the thinner side. So yeah, just taking a look at my notes. I am in a pound CAD position, by the way, guys. I think I talked about it towards the end of yesterday's stream session. So I did pop into that trade shortly after the session ended, or the stream ended. So I'll touch on that in a second. Finally got my haircut. Yeah, appreciate it, Elvis. Finally got the ears lowered. Got stuck under a lawnmower, however you want to refer to it. It was well overdue for that. I told him to make a blanket out of my hair or something because there was a lot. Keep in mind, Nick's code, okay, A1Live for Ola Prime. If you guys are looking for a 35% discount for the account of your choice, you can definitely do that over on olaprime.com. And as always, reach out to me if you have any questions specifically on that firm or anything else, okay? So just a recap of yesterday, yeah, just taking a look at my notes over here I wrote down. So we had a gap down early on in the CFDs, okay, well, really most of the markets as far as like your indices and some of the normally risk on assets. But then Iran come out and actually gave a decent headline. I mean, they had talked about creating a protocol with Oman about the traffic there in the Hormuz Strait, and saying that they weren't going to impose any other restrictions. So the markets generally liked it. And we flipped back to risk on after that risk off gap down that we had from the President Trump address the night before. So it was kind of interesting to see Iran actually spike those markets in the favor of the risk on assets there for a while. But yeah, I just figured, I did a little digging on it. It just feels like it felt like that move was just more of planning for when the war ends. Hey, how are we going to do this safely and all this? It's kind of weird hearing them say safely, but that coupled with President Trump's address, it just seemed like the markets liked it. So they didn't like the Trump address necessarily as much because we did get a risk off push, but then Iran flipped the script risk on. So it was just interesting to see. So, but yeah, what else I got over here? And as always, guys, let me know if you have any specific tickers you'd like me to have a look at. I figure I'll take a look at some of the very bearish, very bullish ones. We got a little bit of an embarrassment of riches today, guys. We got a ton of things to look at. So on days like this, where we have a lot of very bullish, very bearish, I just get rid of my bullish and bearish and just focus on the varies. I like the word vary. Okay, it means it's a little bit higher probability. So, yeah, like I mentioned, I am in the pound CAD. That is a +9 as we speak. So taking a quick look at that over here on pound CAD. So yeah, just a refresher. I was taking a look at this 4-hour demand over here. Let me kind of zoom in a little bit. I was taking a look at this 4-hour demand here. This zone, just as a reminder, it broke structure. But I did have a couple negative points for it when I observed it because the acceleration gap really wasn't that big at all. Remember, it was puny. It wasn't the greatest. So that was one bit of hesitancy that I had. And because of that, I actually decreased my risk a little bit. I would not have gotten into this trade period had we not bounced into these overhead zones over here. Okay. So we bounced into this 4-hour daily confluence over here, supply zone confluence. And then we got that pushed down. And then this demand zone that I ended up buying was the one that ultimately, based and pushed price back up. So that told me that this supply zone over here, these confluences, weren't really the strongest. And so when I saw that occurred, that made me feel pretty decent about this zone. So yeah, price came down. I was live on stream yesterday as it was entering the zone. So I had actually waited for that 1-hour candle to close right here. So normally the rule is whenever I get a bullish candle, the first bullish candle, and I had missed this move over here, and so I was looking more on this move. Well, that candle, guys, if you remember, I mentioned it didn't really excite me that much. But then when we finally got this green candle here, this more expanded range candle, that's where I started perking my ears up. So I ended up waiting on a retracement down to this 15-minute demand right here, the second chance entry I mentioned to you guys. Okay, so the 1-hour candle, and then in its wake, it left this indecision candle right here. So that ended up being the candle that I got in on right there. So yeah, I mean, needless to say, it pushed up nicely early on, but then just kind of went sideways towards the latter part of the New York session after the lunchtime doldrums fade, when the liquidity starts thinning out. And then Asia, very, very slight push up. London, pretty well sideways. And then we come into today's NFP report, and it actually pushed down, but retraced hard. So I think I like where it's at currently. I have to be aware, though, of this 1-hour supply zone overhead. So I'm wagering that this 4-hour zone will be stronger than this 1-hour supply. Okay, so that's the risk I'm putting, or that's the comfort I'm putting, or confidence, I should say, probably be a better word, in the zone I bought on. And then I'm just going to look to take profits up here. Now, we're in a thin liquidity day today. And Kiwi dollar, yeah, Jeremy, we'll take a look at that here in just a second. Oh, thanks, Nick. Appreciate it. So yeah, that's ultimately where I want to take price. Now, we're going to have a thin liquidity day. So, I've got some decisions to make because I'm in a little bit of a profit, but I'm highly doubting I'm going to want to be staying in this by the end of the intraday session today, just because it's the weekend coming up. A lot of crazy things happen on the weekends. There's a saying, nothing good happens past 2 a.m., talking about going out to the bars or whatever. To me right now, that's the same attitude I have with the weekend. Nothing good happens over the weekend. So I don't know that I want to be looking at the session open here in the States Sunday evening and seeing this gap 100 pips down. So I'll probably go ahead and liquidate my position at 3:45 my time, which is 15 minutes before the close. And then if I like this going into Monday or Sunday here in the States, then I may just look to try to rejoin it. So, it had an initial nice pop up, but then it just went lazy. It just got sideways. So when this happens, it just makes me, a little less excited to hold on to the trade. going into the weekend. Now, if today were Tuesday, Wednesday, whatever, that's fine. I'd stay open because I can liquidate the position any chance I get with a stop loss. So I'm just trying to avoid the weekend gap, but yeah, it may not give me that chance. So I may just be out of it. You wanted to look at Kiwi Dollar. So let's go look at that because that one is our most bearish asset, I do believe. Minus 14, minus 50. Yeah, minus 15. So with that one, if you guys remember, I had mentioned we were looking on this. I personally am looking at this supply zone here. I just feel like if we're looking at curve analysis and swing lows and swing highs, I feel like up here is, chopping into that top third section. A little bit of it's in the middle, but you guys see I got a white line there. So that's a 1 hour supply zone. If we drill down into that's actually might be a 15-minute. Yeah, 15-minute. Never mind. So this is a 1 hour, 15-minute confluence. So a little bit slower or smaller time frames, faster time frames, which means what? More noise. Okay. Less institutional, more retail. So I don't. That's never my first choice. My first choice is daily 4 hour. But hey, at the end of the day, this sucker is so strong I should say so weak. It may not give us a chance or a retracement up to some higher premium zones or supply zones. So, yeah, I'm okay with this. Now, again, I always look at my own system as a contrarian. Like, okay, what could potentially make this go wrong? And the one thing I'm looking at is the fact it did not break this support. Okay, it came down to the support, and then it's just kind of went sideways. So I prefer, whenever I get into a trade, I prefer to see price just go ahead and cut through a zone or a floor, in this case, a support, before retracing up. But it didn't do that. So that means I'm going to give it just a little less risk. I don't want to ignore it completely because at the end of the day, it still has a really strong gap. Real strong gap. Very, very clear sideways consolidation after this base drop. So I like that. I'm going to keep that as my favorite going into next week, because obviously we're going to have way too thin a liquidity to probably get anywhere close to that. It probably just goes sideways the rest of the day. So I would just say be careful. I think this would be a better opportunity for next week, in my opinion, just because of how far away it is from the zone, if that makes sense. Why is dollar CAD bullish, you're asking? If X. Let's go have a look at dollar CAD. Yeah, so +9. Well, let's take a look at the currency strength real quick. Okay, so there's part of your reason. I mean, the CAD obviously is pretty weak. Okay, it's only exceeded expectations on basically 3 out of 10 reports. Okay, if you want to look at it on a hard number or 30%. And then obviously the dollar, we just had a really strong NFP report come out, minus the revisions that Nick mentioned at the outset of the stream this morning. So overall, the market's taken kindly to the Dixie. So, looking at the Dixie real quick over here. Let's go to a 5-minute real quick. Reset my chart. There you go. I mean, there's your pop. Okay, within that first 5 minutes of the Dixie. It's since retraced a little bit. So I think, yeah, it could have been stronger of a move. But again, that big, ugly revision that we had last week of 133,000 jobs. Okay, I think that's a pretty fair grade that Nick gave it. He said a B+. I was thinking about that too. I mean, that's an ugly number. So remember, we had a horrible number. Let's just open this up real quick. I just wanted to take a quick look. Let's see here. Yeah, 101. So there you go. Yeah, so we got the pop because that's just a huge difference. But yeah, part of the subduedness is the fact that the revision took place after all. But yeah, just looking at the chart of this thing, dollar CAD that you're asking about. Let's take a look at it. Really strong push up. So let me open up my other chart over here. Daily is up, 8 is above 21. But the challenge that we're facing is the fact that we're bouncing into this supply zones. Now they've been mitigated. They've already been touched. They've already been, taken out unfilled order potential. We did have this little bar here. This was a 4 hour. So we've already pierced through that. So I can delete that. And now we're just basically trying to chew through the rest of the daily. So I'm not interested in buying this at all. I think it's an expensive asset because of where it's at, market structurally. Try to get that word out. So I would just look for a bigger discount on this thing. Dollar CAD moves about 63 pips a day on average, talking about average true range. So it's really not, it's about average, it's about average, or maybe even below average as far as movement. I would say 70, 80 pips, probably about the average if you had to add all the 28 major pairs and cross pairs. So I think that's a little on the slower side. Okay, so I'm just not interested. I mean, if I were to look at this thing and want to buy it, I would prefer to see it continue and finish chewing through the rest of this supply. Now, there's not that much, as you can see right here. Okay, there's only about 15, 20 pips worth of the zone left. So just give me a break and a close. I tell you what, if we can get a break and close and then a retracement, I think this right here is an awesome zone. Let me turn off my master pattern real quick. I think this right here is a really pretty zone. So I'd be looking at something like this. I need to draw in that zone right there. I think that zone is schmexy. Okay, that is a schmexy zone because we got a really strong acceleration gap showing inefficient market structure. And then that's just as clear as day. Drop, base, rally. Okay, that's a sweet spot. That's a 4-hour chart. So let's go take a look at a 1 hour on this thing. And then by the time price goes up, again, this is just what I would like to see. Now, the markets don't always care about what Tiger wants. Oh, wait, they almost never care about what Tiger wants. But I'm just saying, if it goes up here, closes, by the time the 200 EMA rolls around, okay, I would want to see it pierce the 200 EMA, and because there's always buyers and sellers. Okay, that thing acts as a support, dynamic support resistance for a reason. Okay, buyers love buying the touch of it, but I like going a little deeper because I know their liquidity is going to be under there. Their stop losses. Okay? The banks know that too. That's what they focus on. So I think that would be a perfect setup. Assuming RSI went to oversold and everything remained like that. 50 is above the 200. That's a really, really good setup if it does what I would like. Okay. Now, if it doesn't do that and it just comes straight down like this, that's a no trade because that tells me that the higher time frame zone is probably going to win out and push prices down. Okay. So that's all trading is looking for odds enhancers, stacking odds enhancers in your favor. And these are just odds enhancers that I've looked at over the years and after a decade and figured out, I'm like, oh, okay, when this happens, that typically happens. When that happens, this typically doesn't happen. So that's just a few things I'm looking at. But yeah, I like dollar CAD. Aussie dollar. You're asking about Aussie dollar? Yeah, let's take a look. So Aussie, 33%. Obviously, we got the strong dollar in light of the NFP. Taking a look over here. Let's add my bullish on real quick here. Get those back on. I think this wasn't this one? Let's see here. Aussie dollar. Oh, yeah. Okay, so -7. So, yeah, bears, let's go look at it. All right, daily. We had a big, strong push up. Month or so base, and now we're on the way down. On the way down, we have bounced into a zone of demand from right here, back over here. And that's where we got this push up. And it looks like it finally based. Now it's going down. So I don't know. Let's see. This zone would be over with. I haven't even looked at Aussie dollar in a while, as you can tell. I mean, if you wanted to be real aggressive, yeah, I don't know about that. I was going to say there's a little bit of a zone right here, but there's a couple issues with it. Okay. Number one, it didn't create itself. It created as a result of bouncing into another zone. I like zones that create themselves out in the thin air, out in cyberspace, okay? Not as a result of bouncing off of another zone. Now, remember, the zones are a little different than support and resistance. It's just a little bit different mindset. But I got to say, right here where we're like during Asia session and really the last half of New York yesterday, the London today, this is just turned into a little bit of fair market value. Okay, fair value right here. That's basically where we're at. So you've got buyers and sellers. That means you're creating liquidity on both sides of that box right there. And if you're looking to sell this thing, well, there's definitely going to be some stops all throughout here. What are their stops? They're going to be buy orders. So you got buy orders that could fuel sell orders for the, the more institutional types. And then obviously the unfilled orders from the zone. Possibly that could be a zone to short in, but I think that it's just overall a little too scrunched up, because if we zoom out, we got to remember that we did bounce off this higher time frame zone of demand back here. So I think a similar picture to what we just went over with Kiwi dollar. I think I'd rather see it break through the rest of this demand, close down here, proving that this zone is strong, and then look for a retracement up for a possible sell. So I think there's better assets personally to trade than Aussie dollar. I think Kiwi dollar is one of your better bets, and then not to mention Euro dollar is still on there. So let me see here, Euro dollar, Euro dollar did end up pushing into one of those zones and went a little higher, but I think with a decent stop loss would have still been in that trade. So And not only that, but we're in the middle of the curve. So we're diddling in the middle here, guys. Swing low, swing high, diddle in the middle. So I want a premium if I'm trying to short Euro dollar. That's why I drew up this zone up here. Let's see here. Okay, yeah, I was just taking a look at my goodies. But yeah, dollar since the update, okay, we're back over 70%. Since the NFP, everything came out. So let's see here. Yeah, because we were at 54%, remember, yesterday. So yeah, dollar got even stronger. The rich get richer. Dollar Swiss, Kiwi dollar, Euro dollar, dollar CAD, like you mentioned, Aussie dollar. It's all about dollar strength right now. I do want to take a quick look before I get up out of here in a couple minutes. I just wanted to take a look from a 30,000 foot view at all the indices on a daily. Let's just get rid of everything. Get rid of everything. Okay. So overall, of late, if we look at the Dixie, okay, daily chart. So this sucker's been up. Take a look at all the other indices. Down, Australia, British pound down. The KEXI, the Canada index, down. XE a little sideways. JEXI trying to decide if they're going to get yen intervention or not. Down. SEXI, okay, Swiss, down. New Zealand, down. Dixie up. So that right there is showing you the strength in real time if we just look at it on an index level. So yeah, nothing really changes for me. It's been the same all week. Bullish on all the dollar pairs and bearish, highly bearish on Swissies and Kiwis. Okay, anything ending in an E. And I do believe, as far as my alerts go, yeah, that was the pound that I had. Pound CAD. I do believe that was about all I had for you today, ladies and gents. Thinner liquidity day, like I said, currencies, FX, crypto. That's about it. It's a good day to read a book. It's a good day to back test. If you haven't done any back testing for a while, today's a great day for it, because even if we find good setups, some of them could be expensive. We could get the whipsaws. But I think the biggest part of it's already out, save any headlines we get out of the Iran conflict. So good data, again, good day to study, good day to look over all your positions. Make sure you're scaling down. If you're in profitable positions, it's a good idea just to consider maybe taking some profits, okay, especially in light of the risk on move that we had yesterday. But I think that's about all I got. Let me double check one last thing. Sexy. Yeah, that's right. That's right, Nick. Sexy. Yeah, I think that's about all I got, ladies and gents. I'm going to monitor this pound CAD position. I'll let you know on Monday how it goes. And I'll flip a coin at 345 to decide if I want to close it or not. But no matter if I land on heads and it says to keep it open, I'm going to flip it again until it tells me to close it. So with that, I do think we got Alan coming up. I think we had James, but he's stuck in an airplane somewhere, it sounds like. So with that, ladies and gents, I'm going to pass it on over to Mr. Allen, and Marco will be up there about the same time. So have a wonderful Friday. Have a good Friday. Take care. I'll see you on Monday.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. How you guys doing? Happy Friday. We're gonna have a little bit of a slow day today because we do have some closed markets, but we did have some major news releases come out today. NFP came out super strong, but the revision behind that one before it was strong as well. But still, I think markets are taking that decently well. I think it's like a very net positive outcome, not the best. Unemployment rate did tick lower, which is really good as well. So we have seen that here. Stock market, though, in my opinion, is still very vulnerable. You do have this level of resistance here that we still have to breach through, and their 200-day moving average. So we'll go ahead and talk about everything here as far as equities, currencies, gold, oil, and if there's any charts that you guys want me to go ahead and look at, feel free to go ahead and drop those into the comment section in the chat, and I'll be doing my best to go ahead and address those for you. So, so someone said, "Are you having signals and why not?" Oh, I think that was for Tiger. Okay, cool. Hey, Jeremy, hope you're doing well, man. All right, let's go ahead and get started here. So we'll start with equities again. Very briefly here with equities. The actual direction bias and all that good stuff is very black and white to me at the moment. There's a lot of drivers right now. You have the war in the Middle East, you have sentiment, but I think for right now at least, you have technicals really driving the picture here as far as for the equity markets. All of the major indexes, S&P, Nasdaq, Dow Jones, all sitting right below that 200-day moving average, especially that Dow Jones chart. You can see that we tapped into it, and we are now trading here a little bit lower there. So if you want to see some risk on, I think you would really have to see the S&P hold above that 200-day and maybe that 50-day as well. But I think right now the path of least resistance is maybe trading below it in some choppiness until you see a clear de-escalation or escalation for that matter. So that's kind of my thoughts there on the S&P. Now for currencies, this is where I thrive. There's a lot of things, actually. There's a lot of opportunities that I'm willing to take here when it comes to currencies. Dollar index, for one, is very strong at the moment. And it definitely went ahead and rallied after the president said that he was looking to go ahead and finish the job in the Middle East. So you do have that factor there as well. The dollar has been the preferred safe haven during all of this. So love to see that as well. Again, you do have unemployment rate ticking down lower. You do have the NFP report coming out really good today. And so I think you're having a overall resilient economy in the U.S. In fact, let's go ahead and see if that heat map went ahead and updated here so we can get a clear picture as to how that looks in the overall view there for the U.S. So let's go ahead and go to economic heat maps. And by the way, this is the EdgeFinder that I use, guys. So if anyone has questions or anything like that, feel free to drop that into the comments. Or if you even have a question on a specific feature that you want me to go over or how I use the EdgeFinder, me particularly, because everyone uses it different, feel free to just ask me in the chat and I'll do my best to go ahead and answer any questions. But this is the U.S. economic heat map here. And you can see that for the most part, we had a very bullish outlook for the dollar. The only thing that we were really lacking on was the jobs report. So we had, if I remember correctly, you had jobless claims and ADP come out well. However, the two things that were lacking on this was non-farm payrolls and unemployment rate. Those two today came out better than expected. So that is very good for the dollar outlook here. You can see that in the bottom right corner here. at 73%. That was at 1.60 something percent, if I'm not mistaken, yesterday. So it did go ahead and improve there. You can see here how it impacts other economies, other currencies, whether you're trading oil, the S&P 500, gold even. Like, look at gold right there, getting a -8 macro score when you tie it into the dollar. Euro dollar too, getting a -12 reading here. So let's go to the top side of this page and get a refresh look at what everything is looking like here. We're going to go ahead and do this. We're going to go ahead and exclude neutral just to narrow down our options here. You do see dollar index here, very, very bullish. So again, there's a lot of things that I'm looking to go ahead and take on. Dollar Swiss getting a bullish reading, dollar CAD getting a bullish reading, S&P is doing good, dollar yen, lots and lots of stuff here going on here. And if you go to bearish camp here, you can see euro dollar, Kiwi dollar still getting a very bearish reading. In fact, Kiwi dollar actually got worse. It's now -15, which I like to see that. Kiwi yen doing bad. Canadian dollar getting bearish there. So actually, let's go ahead and talk about that. So dollar CAD, one of the sleeper pairs, in my opinion. I actually neglected this one for some time here. And with dollar CAD, the thing goes, we were pretty much trading within this range here for a very long time during the whole war. And my personal opinion on why that was because you had essentially two appreciating assets, or two relatively strong assets here working against each other. You had the dollar, which was getting that safe haven bid, and then you have the Canadian dollar that was somewhat doing okay due to the fact that oil was really high. And so for the most part, we were kind of chopping around in this area. And then we got to the upper bounds of this channel here, and I was looking to go ahead and wait for a break and retest to trade the dollar CAD higher. We never got that retest, so we just chugged higher there. We even breached that 200-day moving average. Again, no retracement into the 200-day. And so now we are finding ourselves at the upper end of what could be some resistance here in the short term, this 1.39500 level. Now, ideally, I want to pull back to participate in dollar CAD, but if you get the same characteristics that you did when we breached this level, or when we breached the 200-day moving average, there's a possibility that we just go ahead and break higher and never get the retracement level. So ideally, I'm going to wait for something. So if I measure, let's go ahead and measure this recent breakout and see where I can get a pullback opportunity. So I'm just measuring from this little low right here to the recent high. And somewhere within the 50 and the 61.8% looks pretty good to me. And that lines up right there with that 200-day moving average. So if we can get a pullback into that level, I am willing to go ahead and buy the dollar CAD. I really like the pair, especially if you get the continued dynamic of the dollar economy or the U.S. economy being somewhat resilient despite all of this. And then you do have, if you do get some kind of a resolution and oil drops, then Canadian dollar will weaken there as well. And that would only propel this to the upside. Ultimate target, in my opinion, would be somewhere within 1.4100, 1.41500 for dollar CAD. Again, I am super, super sad that I missed this whole move. This whole thing right here, this breakout was about 220 pips as of now. And we just never got the pullback following that. So sucks. But okay, that's completely fine there. I think there's still a lot more room to go, especially if you get a de-escalation in the Middle East and you continue to see the dollar or the U.S. economy being somewhat resilient. One thing to mention too, though, is a lot of the data that we've seen up until this point is lagging. It hasn't really taken into consideration the elevated oil factor that we've been experiencing. So we'll see how that plays, right? Maybe that disrupts anything. But for now, the EdgeFinder is telling us that the dollar, the US, is looking quite strong. The Canadian economy is looking quite weak. And so if you still have that relationship going on, if you get any pullbacks, I'm looking to participate dollar CAD long. So that's actually one of my preferred trades at the moment that I'm waiting on. Another one that I really, really like is going to be Kiwi dollar. I like Kiwi dollar and Euro dollar. Kiwi dollar I like a little bit more, obviously, because it has the stronger read here, -15, very bearish reading. One of the highest readings as far as very bearish that I've seen in quite some time. So love to see that. Again, same thing with dollar CAD is that you're kind of waiting for these pullback opportunities that may never come just because the trend is very strong. So I like it. As far as pullback goes, ideally preferred if we trade back up to anywhere in this level here where the 200-day moving average lies or this level of resistance, I'm looking to sell Kiwi dollar. We did get a brief moment where we, traded into the 38.2, which was right here, and then we immediately rejected it to the downside. I didn't do that because I was waiting for a deeper pullback, but Again, this is a trade I want to participate with as long as the fundamentals align. Okay, let's go ahead and answer the question there for Jeremy here. Is it worth to keep short Kiwi dollar over the weekend as we have very bearish reading and DXY bullish? Jeremy, if I could ask you what your entry point is, I kind of think so. I think it's a strong trend. Obviously, if your market order right here, then there's a chance that you can go and draw down too. But it also really depends on your trading plan. I don't know if you're a scalper and your stop loss is only 10 wide, or if you're a swing trader like me and you have stop losses that are 200 pips, 150 pips, something like that. It really depends. So if you can give me that information, Jeremy, as far as where you're filled at and how wide your stop loss is, I can give you a better answer. But if I just take that question there at face value right now, I think that anything can happen over the weekend. Also to your position sizing too. I don't know if you're really big in this position. Obviously that can create some emotions there, but I think it's a strong trend. So as long as you're filled at relatively good prices, I think you should be fine. What are my thoughts on Aussie-Kiwi? Aussie-Kiwi, I get a weird read, Almir. I'll be honest with you. There was a very obvious relationship when it comes to Aussie-Kiwi. The one being Aussie dollar economy, super, super strong. They were looking to hike interest rates despite whether there be a war or not, just because of the elevated inflation factor. Kiwi dollar, weaker economy. Actually, I made a post here on the Telegram channel this morning, essentially going over the S&P 500 and the Kiwi dollar specifically. And the thing with the Kiwi dollar is that their central bank is somewhat very passive in this whole elevated inflation thing, or elevated oil. They're basically taking a very lax approach and saying, we're going to let it pass through, whatever the case may be. If it gets out of hand, then we pivot into hawkish camp. But right now they seem to be neutral is a good way to describe it, or somewhat dovish there. So you're getting that relationship with the Kiwi dollar. The Aussie dollar was very hawkish as well. But from my understanding, recent data points when it comes to the Aussie have actually weakened a little bit. So they're manufacturing PMI came in weaker. There was some other things you had. Services came in weak as well. So things that are really tricky to navigate there. The impact here on the Aussie dollar is 33%, which it was a lot higher at one point. So I would say it's a strong trending asset, no doubt. I wouldn't chase price though. So unless you're filled at a really good area, let the trade run, right? I think there's some good central bank divergence there. But if you're looking to enter it fresh, I would stay away from it for now. I think there's better opportunities out there. Okay. Trading this whole month has been waiting for a deep pullback and not getting it. Othmane, you are describing my life. All of 2026 has been that for me. I've had some opportunities when it comes to, getting the pullback, but for the most part, the trades that I really want, I don't get those pullbacks. I remember Aussie in the beginning of the year, this whole move right here, I was just waiting for a pullback and it never came, or they were just too shallow and I was too scared to participate. Okay. Ayub said, I took a sell before news on pound dollar and got liquidated. Man, that sucks. That sucks, man. I would reevaluate and see what went wrong there. Draco AK47, love the name. I plan to buy EdgeFinder. I'm a swing trader, supply and demand with SMC combined and support and resistance. I used to trade it in a long time before break. I see a good tool for me to see what is going. Yeah, man, it's a good tool. So I use EdgeFinder, Draco. So my dilemma was when I was learning trading and learning fundamentals, I actually kind of went a little bit of opposite direction. I kind of went into fundamentals first, but I was working at a bank on the wealth management side. So I had a lot of insights from people that were discussing markets and advising clients and stuff like that and managing risk. And I was very spoiled in that sense. So when I was learning trading on my own independently, because that's what I wanted to do always, I kind of had that luxury there. And then I went independent and I didn't have those insights anymore. And so, I was doing data consolidation by hand and all that good stuff. I found EdgeFinder. It did the job well. It simplified what I needed, nothing else. Like, it was not overcomplicated. It was just the data points that I really needed to make trading decisions, especially in Forex. That's where I thrive on. And with Forex, it's trickier than you would like for the S&P. For the S&P or something like that, you just need to look at the fundamentals of the U.S., inflation in the U.S., yields in the U.S., that good stuff. with Forex, you have to do that for the US and the counterpart currency as well. So doing that data consolidation with two of those makes it really, really tricky, and it leaves a lot of human error on the table. And so I like the EdgeFinder, man. So I would say buy it. Get used to it. Watch the streams to see how we use it, and just answer or have any questions. Just put them in the chat, and I'll do my best to answer that for you. Stops over yesterday's highs, Jeremy. That's for Kiwi dollar, right? Let's go ahead and check that out. So Kiwi dollar, yesterday's high. Okay. So Jeremy, I'm gonna give you my honest thoughts here. If your stop is, I'm gonna just remove this here. Let's say your stops are right here. Let's say your stop, I'm assuming yesterday's high right here. This is where I kind of want to enter at. So this is kind of one of those situations where your stop loss is my entry. So just be mindful of that. I don't know what your time horizon is on the trade, but I'm looking to go ahead and buy into anywhere up here. So if I'm assuming that you're trading stops or something like that, that works. So if that's the case, then you have no risk on the table. But you said over the wick. Okay, cool. Hey, Marco.
Hello.
What's going on, man?
Doing pretty well. What about you?
Pretty well. Nothing new. Just kind of
Okay, cool.
voicing my ambitions as to what I want to do moving forward with new trade ideas. I like that a lot. I think there's a lot going on. I like Kiwi dollar short, Euro dollar short. I just need a pullback, and I'm not getting them.
Cool. Let me just do the form, and then we can get into it. So if you guys want to participate in the DNA funded giveaway, it's a 5K one-phase account. I'm going to post the link to the form right now. So in the comment section, you will find the link to the form, and just fill it out. You'll get entered into a giveaway. I'll do the giveaway a bit later, so in like maybe 20 minutes, something like that. Anyway, so you're looking at the euro dollar you mentioned?
Yeah, I like euro dollar. I like Kiwi dollar short as well. And I really like dollar CAD. Like, I feel like I neglected this one. It was like a sleeper pair just because it was kind of range bound for a long time. But then just like recently, we got that breakout to the upside, and it has just continued up like tremendously, like 200 something pips. So that's one that I really want to participate in. So if you get a pullback into that 200-day moving average or the original breakout level, then that's something I'm definitely trying to participate in. But for now, it seems like it is just continuing higher here. So if you look at my chart here, Marco, this is like that range motion that we were trading in during the whole conflict, really, or even like beginning of this year, really. So just kind of range bound here. And then once we broke out, we really start to took off. And now we're above these major moving average here. So any pullback, I'm willing to buy.
Yeah, and NFP came out today. It was quite a shocker, if I'm not mistaken. So
it was really strong. The only thing is that the revisions before it were strong as well to the downside, but overall a net positive outcome. And you also did have the unemployment rate too, which ticked lower. Which, if you look at the U.S. economic heat map here, I would say from my memory, and correct me if I'm wrong, chat, or you, Marco, but the unemployment rate and NFP report were the only kind of things really lacking when it comes to the job sector, the jobs kind of category. But you had like strong growth, you had strong, inflation or somewhat strong inflation, or like the whole inflation sector of it, and you had strong ADP, you had strong jolts, not strong jolts, jobless claims. But the only thing that was really lacking was NFP and unemployment rate, and we saw those two tick up for the dollar. So you're getting a overall pretty strong economy in the U.S.
Yeah, I mean, the revisions were pretty big if I look at these numbers. So let's just, yep. Okay, awesome. Actual number 178, forecast 65, but the revision was, I'm guessing, from 126 to minus 133.
Yes.
Oh, that's massive. That's massive. So the reaction was actually kind of negative even, because I'm looking at or positive for the US dollar, because I'm looking at the DXY and it's staying kind of flat on the day. The reaction was pretty minimal. Yeah, I mean actually some bullishness even from the NFP. I guess that's because of the revisions.
Yeah, so I think it was still a sign that the U.S. economy is holding up quite decently well. One thing to mention though is that a lot of this data is still kind of lagging and not taking into account the recent time of the oil spike that we were experiencing at the moment.
Yeah.
So as the more data continues to kind of line up there, we'll have a better gauge as to how sensitive that is. But for now, I think it's a decently good outlook there. I think you could see similar to dollar CAD. I think this is becoming a more of a probabilistic outcome there for DXY, but similar to dollar CAD where you have like this range bound motion here and you just have momentum probably building up here. If you were to see a breakout of this level, that 100.5, with some continued strong data from the US, I do think that is very probable that we can hit 102, 103, 104 in the dollar index. Maybe 104 is stretching it for now, but in the near term, I think 102 would be the next target, in my opinion.
Yeah, I would agree with you, and I would definitely look to play something on the dollar if we get a breakout of that DXY. Let me just bring it up here. So DXY on the daily, I mean, pretty clear support level. And this just goes to show you the volatility in FX has been pretty low ever since the let's say the May of 2025, because the DXY has just been stuck in a range. So if we do get an actual breakout, we should see another sudden spike in volatility. And of course, for traders, that's exactly what we need to catch the trends. That's why I'm hoping something happens, and looks like there's more chance that we break out higher on the resistance rather than drop on the DXY. And it makes sense. I mean, because the situation is still in a stalemate in the Middle East. It is, or it should be, overall bullish for the US dollar. So I think it sort of goes well with the fundamentals that we actually get a breakout to the upside. And as far as your yen positions go, are you planning to close them?
Yeah, so that's a tricky one. I think dollar yen I'm gonna cut off. The other ones are looking quite okay. I mean, they're all break even. That's the thing. Swiss yen though, I think is a good one to just leave open. You have positive swaps; it's not gonna hurt you that much. And you do have like that central bank play where it's favorable to a certain direction here, but if you do get that, that breakout here in the dollar index that I think can happen, I need to be mindful of that. And also too, if you continue to see, the war escalate to a point so that we can finish the job over there, quote unquote, then yeah, you do get a pop in the dollar, and maybe I can just get a fill in better prices when it comes to dollar yen. So because I'm break even, I have the luxury to cut it off. So I think I will do that. I can always re-enter the trade, but I say this all the time, but like it's so much harder to take risk off the table when the trade's already going against you. Like you can always add to a position or create a position, but getting out of it as it's going against you, just like it's just different, right? So I think I'm going to do that with dollar yen here. Dollar CAD, I think I'll keep it here. The structure is a little bit relative weaker compared to dollar yen, for example. You can see the price action is way different.
And the CAD yen.
CAD yen, yeah, sorry, CAD yen.
Cool.
We're under that 50-day, relative weakness compared to the other yen basket pairs. So I like that one. So I think I'll just cut off dollar yen.
Makes sense. Absolutely. I mean, we could get something over the weekend. We could get some sort of an escalation, or maybe not boots on the ground, but something could for sure happen. We know that Trump likes to escalate the conflict during the weekend when the markets are closed. And Monday, I think Monday also may be a holiday. I'm not exactly sure, and it depends on your country, but maybe the markets will be closed, because for me today, for example, I can't trade oil, so oil is frozen. and I can't really trade gold or silver. So, but I can trade Forex. That's how I'm getting my, let's say, data feed. I think it's the same for you as well.
Yes, definitely.
Yeah.
You have the Easter weekend holiday.
Yeah. I just didn't know, or I didn't have any experience before, that oil can be closed while Forex can stay open. Because before I was mostly trading Forex. I didn't even trade oil. And now that I have started to trade oil, I'm seeing that on specific days it's actually closed while Forex is still open. So that's definitely something that I need to adjust. What do you think about the stock market? So we didn't get a sell-off, which is interesting. So today is Friday, last day of the week. I was looking at the cycle just to repeat the analysis. So essentially Mondays tend to be bullish, as you can see with the large blue candles, and then we sell off into the rest of the week. Well, this week turned out a bit differently because there was no sell-off. It was just an appreciation higher. On top of that, gold prices seem to be holding okay. They seem to be going up at least and not falling off a cliff. So is this a new market condition? Is this a shift in the market condition, or is it just a brief pullback before we continue dropping on both?
Yeah, I mean, it's definitely good to see that you're not seeing the Friday sell-off that we've been used to for the past couple weeks here. But I do think that the technical structure is signaling to us that maybe not yet. I would need to see really a break above these moving averages here, and even not even the moving averages, but like if you just look left, this was support here, now potentially turned resistance. So we're still within that range, this zone here that I have marked up. So to me, that's still putting some pressure to the S&P. I think the better trade would be to just wait for a decisive, clean break to the upside and a hold above it. Until then, you're still very vulnerable to any downside that can happen for whatever reason, whether it be bad U.S. data or bad sentiment headlines, whatever the case. I think you're still at risk to that. So even if it means missing out on all of these gains here, potentially, I think it's a better approach to just wait for a break to the upside and hold.
Yeah, I would agree. I mean, the channel is still intact if you put a couple of trend lines on it. So let me just bring up the S&P.
I think Nick has like a really good chart illustrating the structure.
Okay,
if I can try to copy it. I
Yep,
think it's just a trend line kind of going like this, and it really illustrates the picture. I think it's like this, if I'm not mistaken. But like you still have a lot of technical confluences, whether it be a trend line to the downside, whether it be this level of resistance here or potential level of resistance, or the moving averages. Like there still is a lot stacked up against the dollar, or not the dollar, the S&P. Sorry.
I do like that trend line. So I guess Nick used it in the latest video that he did.
Yeah, I think I saw it on the stream too this morning. But yeah, I mean, it illustrates it very cleanly here. Just straight move down. It's like, not even popping above it or nothing.
Yeah. Well, that is pretty interesting. And that 200 EMA is a great point. I totally agree with you. I think waiting for the 200 EMA to start doing something is on the S&P and the stock market is a good option to have. Of course, I do prefer my Nikkei. I do like it a bit better, so I will jump onto the Nikkei longs if we get an actual de-escalation in terms of actions, not words. But if traders just want to focus on the S&P, I think waiting for a break of that 200 is sort of a good play to go. What's your best indice at the moment? Would it be mostly the Nas?
I would say the Nasdaq, if I remember correctly, it's actually been holding up quite well in the recent days. Like tech has been doing okay, but if I had a preference, I would choose the S&P. You did have that broadening rotation going into the overall broad market in the early half of the year or the beginning of the year, and I think that if you were to see some kind of a de-escalation and money going back into risk, then I would choose the S&P. But to your point, when it comes to any index, I say Nikkei has a lot of potential to the upside for sure.
Yeah, absolutely. I think the Nikkei is the way to go. Anything on the EdgeFinder for today? Anything spiking, bullish or bearish?
Pretty much the same flow. However,
Yeah.
the readings are just getting stronger. So the reading that we had, for example, in Kiwi dollar was like a -11 or something like that. Now it's -15. Euro dollar was -8. Now it's -11. So I think the readings are the same. They're just getting increasingly stronger. You're seeing dollar Swiss getting a very bullish reading as well. So I'll look at that chart here briefly just to kind of see if that's one worth taking. But I mean, same thing. Dollar Swiss now above that 200-day, breaking back into this channel here. Again, you're in the middle of the channel, so I wouldn't really break it or trade it one way or the other. If anything, I would just wait for a pullback here if we get it. But there's a chance we don't get it and we just continue trading higher. But yeah, it seems like, you know, the easy play, or not the easy play, but the obvious play until something changes as far as the dynamic in the Middle East is just long dollar.
Yeah. Yep. I mean, we just need another catalyst. We need something to move the markets. I saw an interesting bet on Polymarket. So the bet is called "Nothing Ever Happens" in 2026, and the bet is basically that there's going to be no new crisis, no new war, no new conflict, no new COVID. Well, it already, if you bet that nothing happens, you would have already lost because US attacked Iran. So, but that's a very interesting bet where you can actually, as a trader, if there's nothing going on, you make a very little percentage, but you can kind of hedge that if you just go on Polymarket and you bet that nothing ever happens in 2026, and then you can have that sort of as an insurance policy. But I thought that was pretty funny. So let's do a little game. Favorite currency, favorite stock index, favorite commodity for April.
April? Okay.
For April, yeah.
All right. Okay. Favorite index would be the S&P. Favorite currency? Are you talking isolated currency or like a currency pair?
Currency pair. Yeah.
Currency pair.
And you don't have to focus on like the next week. You can look at the whole of April. So yeah, your horizon is a bit more long term. Okay.
Favorite currency. I don't want to choose an obvious one because like these moves here, like euro dollar, Kiwi dollar, like those are very obvious. Those are very established. And in fact, they have made the move, so there's a chance that they may not be in play come April. So that's kind of what I'm thinking. Okay, I'm gonna say dollar CAD.
Dollar CAD.
Yeah.
Cool.
It's kind of one of those like win-win situations for dollar CAD, in my opinion. And then favorite, you said commodity.
Favorite commodity. Yep.
Okay. Favorite commodity. I would say beef.
Beef. Okay.
Yeah. Let's see. Steak futures. Have you seen that chart, Marco?
No, I didn't.
Let me tell you something. Texas Roadhouse is getting expensive, and that's like a budget steakhouse here in the U.S. But the price of let's look at live cattle. This chart's gonna freak you out, man. What is LEM or LE?
LEM 6.
LEM. At least live cattle futures.
Cool.
It's kind of stabilizing, but this thing has just been trading very, very high for a very, very long time. So
what?
Yeah.
What is happening there?
Cattle's getting expensive, man. So that's my favorite. I don't know if you would call that a commodity, but I would definitely say that's my favorite.
What's the fundamental reason behind it? Any idea?
That's a great question. I don't know. I just know that this is one of those charts where like they say it's never going to get better. So it's only going to get more expensive. So if you're looking for an asset that's going to drift higher over time, you should consider trading live cattle.
That's awesome.
Live some beef. How about you? What are your picks? Top 3 picks?
Top 3, I'm going to have boring picks. So UJ, as far as currencies go, because again, today I saw something from Katayama. If we go to financial juice, so let's go to breaking news and go to Katayama. Let's try to filter a bit. So, yeah, Japan Finance Minister Katayama have mentioned readiness to act firmly against foreign exchange volatility. That was 10 hours ago, my time. So I just want to see UJ. You know, if you were talking about April, I want to see what happens to UJ. I think it's gonna be exciting. It could be some fireworks around this level. They like the posts, the announcements coming out of the BOJ keep getting more frequent because the price is hovering near the levels. So at one point they should go from announcements to actual intervention, and I think that can be really, really interesting. So this is going to be my favorite currency. As far as the stock indices go, it's going to be the Nikkei, which I have been talking about for a long time now. So like the whole government in Japan is right now set up for growth and for dovishness and to bring capital back into Japan. So I think this is a great story. The Nikkei is also beating the S&P from January 2025. And as far as commodities go, again, a boring answer. It's gonna be gold. I think gold has been oversold too much. I think this is a good level to start getting in once, of course, we get an EdgeFinder confirmation. So yeah, it would definitely be gold in my opinion. One thing that I have read is the pros are trading things that are dependent on energy, but are not yet visible in the markets. So crops, for example, setting crops and preparing crops for the next season. We know that right now there's an energy crisis, which means a lot of those crops won't be successful, and a lot of them, like, basically for the next year, there will be a lack of food in specific regions in the world, especially in Asia, because Asia has been hit the most by this energy crisis. Like you're seeing headlines, a lot of Asian countries are going to a 4-hour work week, or sorry, a 4-day work week to avoid wasting gas going from work back to work or back to the house. Those countries, they can have a real problem with crops, a real problem with food, a real problem with energy in general, because a lot of the energy infrastructure has been destroyed. So even if there's a de-escalation, there'll still be a problem. So the big guys, the big players are buying, are buying things that are connected with food and with energy, because the sort of the shock has not yet hit those industries or segments or sectors. I don't know the name, but to trade those things, like you mentioned, to trade beef, you can't just do it on a retail broker. You can't just buy a prop firm account and trade beef. You need to have a very good broker, and you need to have a lot of money in that broker. So like you need to have at least, I would say, I don't know, $500,000 million to successfully trade things like beef. So
yeah, there was I think like for those very niche industries, ways to trade them, you would need to, I think my personal opinion would be like the stock market. Like find the company that is addressing that problem. Like for example, in the Middle East right here, you could have traded oil, you could have traded lots of things, maybe the dollar, like how we're doing here from a retail side of things. But you know, there was this one the Jorge family. I forget where they're based out of. I think it's Netherlands, that I did a post on. And they essentially, it's Excel Technologies, and they were the ones responsible for building submarines that go ahead and find and pick up those landmines that they were placing in the Strait of Hormuz. So like very, very niche, right? Like very, like they're addressing a problem. So like to your point here, I did see those headlines too. Now I don't know if they were exaggerated, but I think I remember seeing that, you know, when the whole oil spike happened and there was a lack of supply, things like that. In Dubai, they were saying like, yeah, man, we only got a limited supply of food. The grocery stores are running dry, this and this and that. Now, you know, they ended up being okay, but I think that was a real story, just a little bit exaggerated for the headlines there. But I think there's a real there's a real I guess vulnerability when it comes to energy and food and stuff like that. Like one of the big things I remember was like the price of eggs. Like price of eggs going sky high. Now from a retail brokerage, you can't trade eggs. Like there's no like egg/USD. I used to make that joke all the time.
Okay.
But you can trade and I think it was Cage was the essentially the main distributor of I forget the ETF or the company, but it was basically you can just trade the main distributor of eggs in the world. And so that was an indirect way of trading that trade or that trend there. So
cool.
like it's like, you know, so they say some of the best trades ever are from life experience that you experience in real life, and you can see it, you can feel it, you can touch it, and then you just find, you know, how to trade it indirectly.
Absolutely. I mean, my oil position is one example. Like I went to the gas station, prices were 20 to 25% higher to fill up my car, and just buying oil made sense to me. And so far it's been working pretty well. But another industry that is going to grow out of this is unfortunately the war industry. So companies such as Rheinmetall and even Airbus, for example, I saw a post that Airbus is building small planes or drones that have rockets, 4 rockets per drone, and can shoot down those Iranian drones for much cheaper than actually shooting huge rockets that the US currently has. So essentially, instead of wasting, I don't know, $500,000 per one rocket, you would only waste maybe $5,000, $10,000 per one small plane with one rocket. And what's pretty funny is that like Airbus is building these drones, and they look exactly like the drones that were used in World War II by Nazi Germany. So essentially, they kind of completely copied the design out of Nazi Germany and are now creating a similar drone today. So it's pretty funny. It's a big controversy on Twitter. Anyway, buying Airbus may be the way to go. You know, Airbus used to produce only planes, commercial planes, I believe, and now they're switching maybe to military technology. So Airbus could catch a bid. Let me just see what this is. The daily chart. So far, it's in a big downtrend, of course, because we went into risk off. But if they have a successful product, I think it should get reflected in the price. Similar thing was Rheinmetall. They produce tanks, I believe. And in 2022, well, you can see what happened in 2022. Russia invaded Ukraine, and Rheinmetall just exploded higher and never stopped going higher. So unfortunately, it's a blood sport, but during conflict, during wars, companies such as this one, they do tend to fly higher. So that's also an option. But again, sorry.
No, I was gonna say, you can always find opportunity somehow to extract value or opportunity from anything, whether it be the price of eggs, steak, or a war.
Yep, absolutely. I saw a comment somewhere. So Max says Airbus always had a military. It was already in 1970s. Okay, then I'm completely wrong. So it looks like they have always been doing military stuff. Zenny says, where can I get Brent Donnelly's newsletter? Just Google Brent Donnelly Spectra Markets. So let me try and show you. If I remove this one, add mine. Just go to Spectra. Okay, this Spectra Markets, and you'll get all of the information there. I'm from Asia. This war is ruining our country. I mean, from the small research that I've done, there could be some major issue for Asian countries, especially the ones depending on energy coming from the Strait, which I think most of the oil coming from the Strait of Hormuz goes to Asia. So it doesn't actually go to Europe. It mostly goes to Asia. That's why some people are thinking this was kind of a chess move from Trump, that he wanted to mess up the supply going to Asia, is specifically China, and maybe then hurting China makes sense in some sort of way. Again, I don't know anything about it, but that could explain why he invaded in the first place.
Mm-hmm. We got some questions here coming in, Marco. Let me go ahead and answer those for the chat here. We got Christian here saying, chat, why is gold, Nasdaq, and S&P frozen? You have a holiday weekend going on, so we do have Easter weekend here. and so you do have like the major or like major exchanges are out right now. So that's why gold, Nasdaq, and S&P are frozen. You can still see, if you want to see the price of these assets, Christian, you can go to the futures market. They're usually trading here. This is the NAS 100 CFD chart from Oanda, and it's still moving here, though very, very slight movement. So although you can kind of see the price action, volatility is very, very thin at the moment. So you might not see big moves right now. But the reason why those charts are frozen for you, man, is because you have a bank holiday here. So usually Forex is only open, but even Forex is kind of quiet today. And then Goodness Oku says, what's your projection there on indices? Projection on indices is just like, essentially, if you have the war continue, this thing's going to stay pretty flat low. If you don't, then you may have some risk on sentiment that takes it higher. But the ultimate bridge that you have to overcome is that 200-day moving average. There's a lot of technical indicators here pointing bearish at the moment. You have this level of resistance here. You have the 200-day moving average. If you slap a trend line here to the downside, you can see that we're under that trend line. So there's a lot of things there that you have to overcome if you want to flip bullish. But for now, I think equities or indices are just kind of like flatline, vulnerable to the downside.
Any other interesting comments?
Not that I know of. Are you doing the DNA funded challenge here today, Marco?
Yep. I can do it now.
Cool. I'll go ahead and step out so you can go ahead and do that one there. But yeah, it seems like so far we are having a pretty quiet day despite the NFP release and stuff like that. We'll go ahead and see. We'll go ahead and see if there is any escalations over the weekend, because like Tiger Barry said, nothing good happens over the weekend usually. So we'll go ahead and see.
Yeah. I saw, I think it was yesterday or the day before, I mentioned Tiger, and people were thinking I mentioned Tiger Woods, but no, it's actually Tiger. It's not the guy with the DUI. It's actually Tiger.
Our Tiger.
Yeah. So,
yeah.
Well, thank you very much, Alan, for streaming with me. This was a lot of fun. I'll do the giveaway now, and then I'll wrap it up. I'll see you next week on Monday. I think it may be a holiday, but I think we will be streaming. We're gonna check that in the schedule. And yeah, let's see that yen. Let's see the yen just go up in value. I'm hoping it happens in April.
Hopefully, they do tend to intervene in low liquidity environments, holidays. Yep. So fingers crossed there. But yeah, we'll see.
Absolutely. So let me then post the link to the form. Just a second.
All right, Mark, I'm gonna head out here. All right, see ya.
Oh yeah, sure. See you. Goodbye. So if you want to participate in the DNA Fund giveaway, the form is in the comment section. Just fill it out and you will get entered into a wheel of names. Okay. It is going to be a 5K one-phase account, DNA. And I just want to mention, if you do want to get funded, make sure to use the code A1Live for 25% off any DNA funded challenge. Okay. So A1 Live gets you 25% off any DNA funded challenge. Why am I talking about the yen, or why were Alan and I talking about the yen? Well, it all has to do with the intervention. I just want to clear things up. What is an intervention? It is a move where the central bank comes in, and in this case, the Bank of Japan comes in and they sell a bunch of US treasuries. Why? Well, to strengthen the yen and weaken the US dollar, because the yen has been losing a lot of value. It has been a pretty weak currency, so it needs to catch a bid. 160 level is crucial. The Bank of Japan and the finance minister, they have expressed a lot of concern about USD JPY going above 160. So why would the Bank of Japan intervene, as Alan mentioned, during a low liquidity event? Okay, we have some breaking news. We're going to take a look. they would intervene during low liquidity because it would take the least amount of selling of US Treasuries to move the market. It makes sense. If there is low liquidity, you can move the market with the least amount of capital. So Bank of Japan is sneaky. They love to play low liquidity. They love to play Sundays, I believe, or Mondays, Monday open. They also love to come in when there is breaking news concerning the US dollar, especially if that news is supposed to be bearish on the US dollar. So then they just kind of add fuel onto the fire. And that's why also we could get, I don't think we'll get an intervention at this level, but holidays are now, so we could get an intervention, right? Essentially. I don't think this is the right level. I think we need to go to 161, 162, maybe even 163 to get an actual intervention. But now would be the time, as far as the timing goes, now would be a good time to do it because the liquidity is low in the markets. Richt says, Euronews, French ship crosses Strait of Hormuz in first Western European transit during Iran war. That's good to hear. Let's see. Do we have that on Financial Juice? No, we have F-15 fighter jet was shot down in Iran. Is the US still using F-15s? I thought they have F-18s. Maybe mistaken. Official in Southwest Iran calls for widespread chase to locate pilots. Okay, this is just about the pilot. Okay. Yeah, I don't see anything. I'm trying to find. Only thing we got, Marco, is that some Europe country ships start to pass. Okay, well, that's good. That's good. Definitely brings us closer to a possible de-escalation. Unfortunately, we cannot see the current price of oil. You can go to IG weekend oil, and we can take a look at that. Let's see if we go to the hourly chart. Pretty much nothing. What about the daily? Yeah, staying at the current level, hovering around the current level. That seems to be the case. It's just noise, probably crossed with its transponder off, possibly. I want to do the giveaway now. So let me grab all of the names for the giveaway. 3rd of April is today. So let's get all of the emails. Copy that. Go to the wheel. Paste, spin. Let's see. Oh, okay, I messed it up. Sorry. I should have copied the names, but hopefully I didn't leak too many emails there. Okay, let's go to the names. Paste, spin. Okay. This time it's right. Sorry about the email stuff. So, Mohammed N, congrats on being the winner. It's going to be a 5K one-phrase account. And after my segment ends, I will post or I will send you the code for the free 5K one-phrase account. I just want to repeat, if you do want to get funded with DNA, there's the code A1 Live. So code A1 Live gets you 25% off any DNA funded challenge. Okay, so this is my personal two-phase funded account. I'm down $666, devil's number. We'll see if I get a payout. So currently down around 3%, aiming to climb out of the drawdown, of course. Kind of brings me back to the last funded account I had with DNA, which was a 50K one. which I breached, but then passed the phase 1, passed the phase 2, now on the funded stage. So only thing I can do is I can keep on executing the strategy, which is the ChatGPT trading strategy, and we shall see what happens. As far as trading goes, I've had a great experience with DNA. Big brokers behind them, they're using Trade Locker. Once you hit the profit target, the trades automatically close, so you don't have to hunt for the profit target. And Trade Locker has a built-in risk calculator, so you don't need to manually calculate risk. If you want, absolutely check it out, and don't forget to use the code A1Live. I have 5 more minutes, and then I will wrap things up. So let's see some comments. Gold will hit, I don't know what you're writing here. It's reported they broadcast its French ownership as it transited the Iranian coastline. Okay, well, thanks Max for the heads up. I'll look into all those gaps and the gap rules, but I am holding, as far as the trades go, let's see. So I'm holding a sell on GJ, a sell on gold against the euro, and a buy on the SPX. Essentially, this account is purely traded by ChatGPT. So it's a challenge I'm doing for my YouTube channel. I've been doing it since, I think, June 2025, almost 1 year now. And ChatGPT has been pretty successful. So if you want to take a look at that, you can follow me on my YouTube channel, which is Marcos Trading Journey. Let's do some more charts, and then we're going to wrap it up. Gold is on the watch list. Just want to repeat, I think we have found a short-term bottom. I'm looking for a bullish reading from the EdgeFinder, and then I would be pretty happy to get in. Of course, I would also like for us to cross the 20 MA, to be above the 20 MA, but it's not like a rigid requirement. So this level is fine. As far as the price goes, I do like this level. Update on positions. I have a buy setup on US oil, which I took 50% off right around this level, or I think around 111. I have a sell on UJ, which is break even, and I have a sell on Swiss yen, which is break even as well. If we flip to risk on, if there's a de-escalation, I'll buy the Nikkei. And if we get a bullish reading on the EdgeFinder, I will buy gold. Okay. As far as currency world goes, I know people are looking to sell EU, sell AU, sell GU. Personally, I'm not. So I'm being patient at the moment. I'm not sure about the dollar. The dollar has been overbought. Absolutely. The crowd, the positioning has been really heavy long dollar. So that's never a good thing. That's never the time to buy the dollar. I would like the positioning to go a bit more neutral. We are also stuck at a massive level of resistance, which is another issue. So can we actually break out higher, or will we stay at this level? That's the question. If we do break out, I would love to see it. Absolutely, because we would then get some pretty steady trends. And it has been tough trading currencies in this environment, for sure. If you have been trading the US dollar and currencies connected with the US dollar from May 2025, it has been tough. You know, the volatility hasn't been sky high. Things that have been moving is, I think, the yen. Yeah, I mean, the yen has been moving a bit more. But if the DXY can finally break out of the range, I would love to see that. With gold, I would be more careful in both buy sell. Just wait 1 hour minimum before the open. Even if it reached your target, remove it. Okay, that's a good tip. Thank you, Max. Do we have any other comments? Nope. Final chart before I wrap things up. What shall we do? The DAX? No, DAX looks horrible. Silver? We can do silver. I haven't touched on silver for a while now. Silver, in my opinion, I don't like it. I think gold is a bit better. Yes, I know there's a correlation. I know that if gold goes up, silver will follow, but I would much rather put my focus onto gold rather than silver. So silver had a massive uptrend. I think it's time for a correction. Usually, if silver makes more than 100% return in 1 year, the next year tends to be break even or negative. I think at this point, silver is negative for 2020. Let's see. Silver is break even on the year. Yeah, that's exactly what backtesting would tell you. Okay, if silver makes more than 100% in 1 year, next year is break even or negative. So this is definitely not a surprise. Anyway, that's it from me. Thank you very much for watching. You can catch me next week, pretty much every single day. Also, I'm doing one giveaway per live stream. Good luck in the markets. Take care. Happy holidays. Happy Easter if you're celebrating. And that's about it. So good luck. See you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.